Now for Raising the Bar, Greater RVA's premier law talk radio show. Call into the show with your stories and questions at 804-454-1366. 804-454-1366.
Good morning and welcome to Raising the Bar, Greater RVA's Law Talk Radio Show. This is attorney Colleen Quinn, and with me today is attorney Kati Dean, and we're going to be talking about tragic tales of undercoverage. We're going to share some pretty bad sob stories when folks have gotten insufficient auto insurance coverage, and we'll talk a little bit at the end of the show, too, about homeowners coverage and why it's essential to have that, or renters or condominium owners coverage, and some tragic tales there as well. So remember that Raising the Bar Law Talk Radio show is on every Wednesday morning, and you can also catch it on the Locke and Quinn Facebook page live, or you can see any of the prior videos that have been done there. Also, if you go on the www.raisingthebarlawtalk.com webpage, you can find the link to all the podcasts on iTunes, and the videos also uploaded there as well. Raising the Bar Law Talk Radio show covers a whole variety and plethora of different legal topics, ranging from employment law, and if you've got a job, employment law affects everyone, right?
Absolutely.
Workers' comp, if you're injured on the job. We cover divorce, support, adoption, surrogacy, personal injury, medical malpractice, just a whole variety of different legal topics that affect everybody. So there's just a lot of good free information there that you don't have to pay an attorney, right?
Right.
And in addition, on the Raising the Bar Law Talk Radio page, we also have a list of all the low cost and pro bono, that is free services that are available to folks, which are not just like the Virginia Poverty Law Center for those that can't afford it, but there are services for folks with disabilities, right? Katie, you worked at the Disability
Law Center,
right? And also for veterans. There's a really good legal program for veterans. So lots of good stuff there. Now, if you have a call today that you want to make and ask us about auto insurance or homeowners insurance coverage, please call in to the show at 804-454-1366. This is an area that a lot of people don't understand, and yet from our position as lawyers at Locke and Quinn, we've seen some pretty tragic tales.
You
know,
can really make or break a case sometimes if there's insurance coverage or not.
Right.
Yeah. So I guess let's get started. What are some of these tragic tale examples of folks not obtaining enough auto insurance coverage when somebody else causes an accident?
Yeah, so the first thing is understanding that there are two primary types of coverage that cover bodily injury, which is what we're really worried about. I mean, most people get collision coverage that covers the property damage to the car. But liability coverage is the coverage that I get on me if I cause an accident. So if I pay the $500 fee to DMV and waive getting any coverage, and I cause an accident, then somebody can come after me and my personal assets because I failed to have coverage, right? I failed to have any insurance on me, and now I just caused injury to somebody else. And if I don't have much in the way of assets, they can still get a judgment and then a garnishment and garnish my wages. So getting the liability insurance, that protects me when I cause harm to somebody else. And now I'm responsible for causing their injuries, and now they can get a judgment against me. Now, the other thing I can get is I can get uninsured or underinsured motorist coverage, which is we call UM or UIM coverage. And that protects me when somebody else injures me. And they don't have enough coverage. Either they let their insurance lapse, or they paid the $500 and forewent it. And they don't have sufficient assets. Now I have coverage that protects me when somebody else caused me being injured. So let me tell you a case. Let me just kind of give some examples, because sometimes this concept is not always easy to grasp.
Right.
So PJ was a daycare worker for my kids quite some time ago because they're 26 years old now. So that was quite some time ago. But it was a really good case to illustrate this point. So PJ had the minimum limits of $25,000 in uninsured, underinsured, UM/UIM coverage. She is hit from the rear in a rear end collision. She suffers 3 herniated discs in her neck. Yes. She has to have cervical fusion in her neck. She's out of work for a really long period of time. Her medical bills alone are $40,000. She's got another $15,000 or so in lost wages because she's, has to be out of work. She's got the cervical fusion. And the person that hit her had let their insurance lapse. They had failed to make the monthly payment for several months in a row. So basically, that person that hits her has no insurance. PJ has the minimum limits of $25,000. She's got over $40,000 in medical bills, another $15,000 in lost wages. And do you know, we had to file suit and fight to get that $25,000 almost up to the day of trial. And this is going after her own insurance.
Right.
So what PJ learned from that, and I said, PJ, 25,000 minimum limits, that is not adequate. So she learned her lesson in that, and she went ahead and she increased the limits to 100, 300, which is 100 per person per accident, 300 total for everybody that's in the car. God love her, because about 2 years later, she is out in Powhatan, and she's on one of the main roads there, and she's at a stop getting ready to make a left-hand turn. She's got all of her kids in the car, and she gets nailed in the rear by somebody going 65 miles an hour.
Oh my gosh. Pushes
her car like all the way across the road, way into farmland, etc. Thank God she had a bale of hay in her trunk, which helped buffer the impact.
Wow.
Okay. But now, fortunately, the cervical fusion in her neck held, but now she suffered serious back problems.
Right.
And so did her son. And he was playing football, etc. He ended up having chronic back problems. So $100,000 wasn't even enough to cover her son's bills and injuries and the permanency that he suffered as a young man. So even at the $100,000 level, it may not be adequate coverage to protect you if somebody hits you. And so in that case, what happened was the person that was going 65 miles an hour in a truck that hit their big sedan from behind only had the 25,000 minimum limits. So what happens, as you know, Katie, is the 25,000 gets credited against the 100. And so PJ's insurance picked up the additional 75 once you took the credit for the 25,000 of the young man going 65 miles per hour in the truck that wailed into them while they were at a standstill.
Yeah. So her coverage was making sure that she had up to $100,000.
Exactly. It made up the difference between the minimum 25 that the young man had and then the 100 that she had. So that was good, because she
better than 25.
Right. She had done better by increasing, her coverage from the minimum of 25, her UM/UIM coverage. But still, even in that case, 100 still wasn't sufficient.
Yeah, definitely. So you talked a little bit about minimum limits in Virginia. Is that the same across the board everywhere you go?
No. So in Virginia, we actually, 25,000 is pretty good, but some states are even less, where there's only 10,000 or of minimum limits. So that means that you cannot count on people driving out there as having adequate insurance.
Or any insurance.
Or any insurance, right. They might just pay, in Virginia, you can pay the $500 and go uninsured, which is really dumb. I mean,
yes.
I wouldn't recommend anybody do that. I mean, the cost of the $500 is almost what the cost of coverage could be,
right,
for a year. So why wouldn't you go ahead and get insured? And so, and then some people just say they have insurance, but then let the insurance lapse. Or they might even be from out of state and only have $10,000 because that state only requires a minimum of $10,000 instead of Virginia's $25,000.
Right. And so people are required to certify that they have insurance, right? I mean, so you do kind of assume when you're out there driving that anyone who hits you is going to have coverage. But I mean, so you're saying that's not always the case.
Well, people can certify,
Right.
they can lie,
Right.
or they cannot lie and certify they have it, but then the next month fail to, if they're paying on a monthly basis, fail to pay it,
Yeah.
or have every intention of getting it, and then just fail to get the coverage. And insurance is not that expensive. It's really one of the fundamental things that folks should do is get adequate auto coverage. And
Right.
we'll talk later about homeowners, renters, and condominium coverage just to protect themselves.
Well, I know you also have cases where like hit and run. I mean, I know my husband got, his car sideswiped and you have no idea who did that. You're not going to be able to track that person down. So you're also looking at what does your own insurance pick up in that situation as well.
Right.
Because you don't
even for
know.
property damage.
Yeah.
So those are what we call the John Doe cases or Jane Doe.
Yes.
We don't know. It's a hit and run. We don't know whether it was a male or a female. Or John Doe. If you don't have any idea, it's a John Doe or Jane Doe case that you've got to bring, especially if somebody's run off the road and there's nobody to go after for their insurance. So again, it falls under the UIM. So it falls under the uninsured coverage because somebody just ran me off the road. Or somebody hit me and fled the scene and we couldn't get a license plate number or any sort of idea who they were. Well, my only recourse is going to be under my own policy. And if I did not get coverage, uninsured motorist coverage, if I check the box and said, no, I only want liability coverage, well, I'm screwed. So,
Absolutely.
In that regard.
Absolutely. So I know some policies also have what's called medical payments coverage. What is medical payments coverage?
Yeah, so MedPay is additional coverage to help pay medical bills, whether it's your fault or somebody else's fault. And it's a really good thing to have. It doesn't cost very much.
Right.
And also typically it will stack by the number of cars. So let's say if I get $5,000 MedPay coverage, I've got 4 cars on my policy. Well, then that's the 5,000 times the 4 cars. That's $20,000 in medical payments coverage. And that's going to help cover where my health insurance might not pay. So my deductible, my co-pays, et cetera. And it gets a little more complicated than that because technically it should pay out even when my health insurance does. But as you know, we're running into a lot more skirmishes in terms of collecting MedPay for some folks. However, having medical payments coverage is still a really good thing, especially for folks that don't have health insurance at all.
Oh
I mean,
goodness,
it has saved some of our clients who would otherwise not be able to get medical treatment after an accident, the fact they had medical payments coverage.
Well, and I also know that that's something that, because you said like it's regardless of whether or not it was your fault, so you can still be arguing with the insurance over whether or not the accident was your fault, but you can get this medical payments coverage sooner rather than later. Some of these personal injury cases can take a long time for people to get their ultimate, settlement from the insurance company, but this med pay you can get
right away.
Yeah, right
As
away.
soon as you incur as soon as you're responsible for or incur the bills.
So it really does, I know, help a lot of our clients that are just trying to stay on top of their medical expenses right after an accident.
Oh, yeah. And oftentimes they're out of work and it's a double whammy. If they don't have sick leave, now they're losing income. So being able to just make their household or monthly or just their household payments becomes difficult. So having that medical payments coverage is a lifesaver.
Yeah. And you mentioned, a little bit it can pick up some of these costs that health insurance doesn't, but how does it work with health insurance if you're getting medical payments coverage and you do have health insurance that's also covering some of your medical bills?
It's a tricky question because some of the insurers interpret things different ways. But technically, the medical payments coverage is supposed to be there whether you have health insurance or not. But at a minimum, the medical payments coverage will cover your deductible and your copay, your out-of-pocket things that you're responsible for. We are running into issues where the health insurance won't pay until the medical payments coverage pays out. and the medical payments coverage won't pay if the health insurance has paid. So we are running into some tricky situations. It's pretty clear cut if you don't have health insurance at all. It's just flat out the medical payments coverage. But it's a complicated area where we're running into some skirmishes with regard to who pays first and when is the medical payments coverage. When does it need to be paid out? But at a minimum, if you have health insurance and med pay, between the two, we're going to make sure that you're getting your medical bills covered.
Right.
It does get called other things in other states. So it's called PIP, personal insurance protection, or personal injury protection in a lot of other states. So in Virginia, we call it med pay, but in other states, they call it PIP coverage, PIP.
Yeah. But it's a good thing to have.
It's definitely a good thing to have, right? There's also coverage. The PIP can cover also lost wages in other states. In Virginia, typically the lost wage protection is separate from the medical payments coverage, but you can buy lost wage protection too, which is another really good thing for folks to have. I love it when we have clients come in and we see that they've not only got the medical payments coverage, but they also have purchased lost wage protection. And folks, we're not insurance agents. We're not trying to, make money for the insurance industry. It's just from the attorney side and having handled so many tragic cases where we see folks come in with inadequate coverage and now they're out of work and especially if they don't have health insurance and they're injured. I mean, we've seen people go bankrupt and it's really sad.
Absolutely. Well, we always talk about the 3 parts of any personal injury case you have to have: damages, liability, and collection. And collection is what we're talking about today, that last piece of you can have really high damages, someone was really, really injured. You can have, really clear-cut liability, who is at fault. But if there's no money there,
what's the point?
Yeah.
It's like, Tom Cruise, show me the money. We got to have something to go after. Otherwise, you and I have seen cases where there's clear liability, ran the red light, totaled the car, clear of damages, went straight to the ER, herniated disc, and then neither side has auto coverage, and there's no recovery. So yeah, not trying to sell insurance here, just trying to make sure people are adequately protected.
People aren't coming into our office and we have to tell them, look, I'm really sorry. This shouldn't have happened. You were really hurt. It wasn't your fault. And there's just not that much we're going to be able to do in terms of getting you compensated.
Right. Even $25,000 in many cases is not enough.
Right. With some of these hospital bills. So we talked a little bit about how MedPay works with health insurance. What about health insurance as part of the larger personal injury claim? Can your health insurance come back and make a claim if you've gotten a recovery on a personal injury case?
Yes. And that becomes a tricky area as well. So when we look at these cases, a lot of times we look and see what are the potential liens on the cases. Medicare and Medicaid are going to have an automatic lien against the recovery in the auto case, which is again why you need to have more insurance, at least a minimum of $500,000 of $500,000, because if you're having a lien made against your case, you're going to want to have an adequate amount to pay out the lien, but also to be compensated for the injuries. So as you know, I'll share another case. I'll just say the person's name was TJ for the sake of giving the person a name. And so TJ comes in. TJ's in a really bad accident, has to learn to walk again, basically fractured ribs, fractured hip, and has medical bills of over $300,000. TJ has a policy of $100,000 UM, uninsured, underinsured. The person that hits TJ has the same $100,000. So it's a wash, okay? There's only $100,000 there because TJ's policy is the same. So it's basically a wash. The $100,000 of the person that hits her, it's clear liability. Damages are severe. Basically, they're going to pay out the full $100,000. Now, we could go beyond the $100,000 and try to go against the assets of the person that hit her. So we always do, as you know, we always do some investigation.
Right.
But most people don't have the money to try to go after beyond the insurance.
Right.
And in this case, the person that hit TJ was young and had no assets just to speak of. So all that's there is the 100. Okay. Well, now she also has health insurance under an ERISA plan, ERISA plan, which most of your big plans, Anthem, Blue Cross Blue Shield, a lot of those big plans, Covington, et cetera, are ERISA plans. They're federally basically protected, or they fall under federal law. And so under her ERISA plan, she potentially, the ERISA plan basically says that it can have a lien.
Mm-hmm.
Now, we do not have to honor any lien for a health insurance plan, like an ERISA plan, unless we receive actual notice of the lien,
mm-hmm.
which is different than Medicare or Medicaid, or anything paid out, but that's like by the state government, like
Right.
MCV, VCU, treatment. Those cases, we're kind of on an automatic notice,
Mm-hmm.
right? Statutory notice. So anyway, I tell TJ, look, right now we don't have any notice of a lien under your ERISA plan, but they could potentially have a lien for $300,000 of medical bills.
Mm-hmm.
And right now we're not on notice, but all you've got is 100,000. So let's take the 100,000. And under the United States Supreme Court opinions that have come out, later on, if the health insurance tries to make a lien, if TJ no longer has the funds,
mm-hmm.
then they don't have anything that they can come after her to get.
Right.
So in that case, TJ took the 100,000. She immediately used the money on her kids' college tuition and to pay off various bills. And lo and behold, several months later, the health insurance sent a notice of lien. But we said, sorry,
too late.
Case already settled. Here's the U.S. Supreme Court law. She doesn't have the funds.
Mm-hmm.
She's safeguarded because she doesn't have the funds under the U.S. Supreme Court opinion. But that's always a concern too.
Right.
Now if TJ had a 500,000 or really $1 million policy,
mm-hmm.
Then she would have been much better protected. We would have had to fight to get the policy payouts. And by the time we did that, the health insurance might have actually gotten that lien notice out there.
But there would have been enough coverage for them to assert their lien and then for her to still...
It's for her to get a much greater recovery.
Yeah.
Even if they were able to get their full lien of 300 and she had $1 million policy, even with attorney fees taken out, she would have, netted some 400,000 or so, much more than what she netted from the 100,000 that was available.
Absolutely. And if they had been able to assert that lien before she settled for the 100,000, that would have wiped out her entire...
She would have got nothing.
Yeah.
Right. She would have got nothing because the way these, especially these ERISA plans are being written now, they are airtight in their language, and the U.S. Supreme Court has upheld that airtight language. We are going to go to break. Remember, we're talking about having adequate auto insurance and also homeowners, condominium, or renters insurance. And if you want to call into the show, 804-454-1366. Great opportunity to get some free legal advice.
Yep.
Richmond's premier Law Talk radio show. Call into the show with your stories and questions at 804-454-1366. 804-454-1366.
With SRN News, I'm Rich Thomason in Washington. The U.S. economy firing on all cylinders at the close of 2017. The Commerce Department says the economy grew at a solid 2.9% annual rate. In the final 3 months of last year, it got a boost from healthy consumer spending. The North Korean leader's trip to China this week may have surprised many, but apparently not the White House. The White House says it was kept in the loop about that meeting in Beijing. The Supreme Court will be hearing arguments today on another gerrymandering case, a case that could change the face of American politics for decades to come. Facebook is making some changes in its privacy settings, putting them all in one place, making those settings easier for its users to find. The Dow is up 56 points. More details at srnnews.com.
You know, I'm not a genius about money. I love my credit cards, and they love me. I was using them as a source of income, and then I got behind in my payments, and creditors were calling. I figured I had a problem, and I didn't know how to deal with it. I heard about Trinity, so I called and talked to a counselor. In half an hour, we worked out a plan. Now I've got one easy monthly payment, a lower interest rate, and I'm getting out of debt.
If you're in an endless cycle of paying on credit card balances that never seem to go away, then get ready for a toll-free number that will put you on a path to financial recovery. Trinity will consolidate your accounts, put a stop to late fees and over-limit charges, reduce your interest, and possibly improve your credit score. You'll save thousands. If your debt has you down, we should talk. Call 1-800-990-6976. That's 1-800-990-6976. Call 1-800-990-6976.
Quality health care in your community is important. Legislators in Richmond have a way for hardworking families to get health care coverage they need. This conservative plan, developed for Virginians, protects state finances and brings our tax dollars back to help people in Virginia. It is conservative entitlement reform with personal responsibility rules on work and healthy behaviors. Tell your legislator to vote yes for conservative reforms to help more Virginians get the care they need. This ad sponsored by the Virginia Consumer Healthcare Alliance.
Office space for rent. That's right, over 1,250 combined square feet of prime location office space to lease at the intersection of Route 10 and Harrogate Road in Chester, Virginia. The space boasts 4 very large to medium-sized offices as well as a large reception area, which perfectly suits businesses like an insurance company or a financial firm. With unbeatable road frontage along Route 10, this office space won't remain on the market for long. Call 804-717-2000 now before the space is gone.
Now, back to Raising the Bar. Call into the show with your stories and questions at 804-454-1366. 804-454-1366.
We are back after the break, and this is Raising the Bar, Greater RVA's Law Talk radio show. Mm-hmm. Today we are talking about having adequate insurance coverage, both auto insurance, and at the very end of the show we'll talk about homeowners, condominium, and renters insurance. Mm-hmm. And we've got a caller on the line, Diana. Are you there? You are live.
Hi, yes, thank you for taking my call.
Yes, Diana, and you've got a question for us.
I do. If you're in a multi-car accident, like if you're going down 64 and you see, 6 cars in a row.
Right.
And obviously, somebody might have braked and then everybody just slams in, like that.
Right.
How does auto insurance get untangled with multi-car accidents?
It can be a little bit complicated, Diana. So let's say that you are a good driver and you see the accident ahead and you stop in time. However, the person behind you does not stop in time, okay, and hits you.
Uh-huh.
And then the person behind them does not stop in time, hits the car that hits you, and hits that car into you, okay? So you're envisioning this. You're in the front of the 3 cars. Mm-hmm. Car 2, you stop. You've got a big pile up in front of you, which is a lot of reasons why folks will have to stop suddenly, mm-hmm. which then oftentimes what we see is the second pile up.
Absolutely.
Okay.
Right. So you stop in time, and we're not even going to talk about that first pile up. We don't know who caused that one, but we just know you stopped in time because you're a good driver. And the person hits you from behind. That's car number 2.
Uh-huh.
Okay. And so they whack you. You've now got whiplash and potentially concussion from that. And then the car behind them, car number 3, doesn't
uh-huh.
stop in time, smacks into them so hard that car number 2 hits you a second time. Okay?
Uh-huh.
So what we're going to do is we're looking at both cars number 2 and 3 as being at fault.
Mm-hmm.
So we are going to look to the coverage for both of those drivers and see what that coverage is. One of them may only have 50,000. The other one may have 100,000, but we're going to be able to tap into the coverage of both of those drivers. Now, it can be a little bit more complicated. Let's say that driver number of car number 2 is driving a borrowed car.
Oh dear.
Okay.
Uh-huh.
Well, it's okay. That's actually a good thing if the driver has insurance coverage on them.
Mm-hmm.
Okay. They've got cars at home, but they've got coverage, their own coverage. And there is coverage on the borrowed car. Because now there's more coverage. So in any of these cases, first, if it just involves an individual car, first of all, we want to see, is there coverage on both the driver and is there coverage also on the car? Because we can stack that. And now if it's in its multiple vehicle collision, well, now we can look and see, is there even more coverage? And then same thing with driver number 3. We want to look and see, is there coverage potentially on both the driver and also the vehicle? And then we want to follow the driver home and see, is there any additional coverage in that household? In other words, do they have 2 cars under one policy and 2 cars under another policy? And then we want to get the policies themselves and actually look at them to see just how much coverage are we going to be able to add up to protect you, Diana, because you were the good driver and you were injured in that accident. Does that make sense?
It does.
That was
Thank
an
you.
awesome question. That's a really good question because we hadn't really focused on
Yeah.
the adding up of the driver coverage versus the owner of the car coverage. And then it gets even more complicated when you've got a multiple car collision.
Absolutely.
So yeah, thank you so much for calling into the show, Diana. You have a great day.
Oh, you too.
Great.
Bye-bye.
Thank you. Bye-bye.
And then, of course, you have driver 2's car that's going to say, well, that was just a tap. It was driver 3 who caused all that. So those 2 are going to have to fight over who really caused all the injury. But at least, like, we said the money is there in that case from multiple different sources.
Right. Yeah, I mean, in many of these cases, we do have to fight for the money. But the good thing is there's coverage there to fight for.
Right.
The tragic tales are when there's not the money to fight for or there's just an insufficient amount.
Right.
That's there.
So let's switch over just a little bit and talk about liability insurance. What is a tragic tale of not having enough liability insurance coverage?
Well, if you don't have a pot to pee in, like you have no assets,
Right.
Okay, you don't have to worry about it. But let's talk about Mr. P. And he unfortunately lets his insurance lapse. Okay, just forgets to pay the bill. It happens all too often, which is why you should just go ahead and pay the annual premium. The monthly premiums, unless they're on auto pay, can easily be overlooked to be in terms of being paid on time. So Mr. P he fails to pay. The person that he hits also has no coverage. Mr. P is not married. So when you're married, typically your assets are better protected because your spouse is a co-owner of all those assets. So it's hard to go after him. Mr. P's not married, and he's got, a $1 million home, really good job, lots of assets, etc.
Definitely not someone who should be letting their insurance lapse.
Exactly. And so, Mr. P he's wide open for being sued and for having the funds that we can pursue because he's failed to adequately insure himself.
Yeah. So that would be a situation where even though there was not adequate insurance coverage, that would still be worth fighting for because there is something
right
in that case to fight for. It's just in that case going to be someone's personal assets, which is, I think,
if they have a whole lot, it's worth going after. As you and I know, the first thing we do is we start to investigate the defendant to see is there and potentially if they only have 25,000. But they have a whole lot in assets, we might want to go beyond the 25,000 and pursue the personal assets.
Yeah. So what is the minimum amount of liability insurance people should really be thinking about having?
Well, I personally believe that you should have at least 500,000. Now, folks that don't have much in the way of assets to go after, 100,000 might be sufficient because at least you've got money there that if you do cause injury to someone else, you want that it's tough if you cause injury to somebody else and that's why we call it, it's negligence. It's typically accidental.
Right.
Okay.
You weren't trying to hurt
You weren't
someone.
trying to, unless it's a drunk driver case or, reckless driving, you're not intending to hurt somebody else. So you want to see that somebody that's injured gets a recovery, that they're compensated for that. If you have assets, especially if you have significant assets, you want to have a policy of at least $1 million. You don't want to be like Mr. P, where you're sitting wide open, where, now somebody can basically get a judgment and lodge it against your house and take a judgment against your stocks and mutual funds or whatever other assets you might have that can be, attached.
And in those cases, I mean, it's hard because on the one hand, yeah, he didn't mean to cause the accident, but he did and hurt someone, and it's not their fault either. So
right, and he let his insurance lapse.
Right. All right. So, what is the minimum amount of UMUIM that you would recommend?
And see, there, I personally believe at least $500,000, and actually, I would say get at least $1 million in UMUIM, because you and I have seen some pretty tragic cases.
Yeah.
So let's talk about Cece. Okay, tragic case where she's got over $900,000 in medical bills, is essentially crushed under the vehicle, has to have her hip and pelvic area rebuilt, has to learn how to walk again. And it just so happens in that case, there's potentially $1 million in liability coverage, but they're fighting that, and there's a coverage issue. And fortunately, Cece has not only $1 million UIM coverage to protect her, but she and her husband have purchased another $1 million in excess. It can be called excess coverage or umbrella coverage on top of that. So in that case, tragic injury, $900,000 or so in medical bills, has to learn to walk again. But at least we know, and we're having to fight for it. I mean, everybody starts to then argue, well, maybe there's not coverage,
Right.
So you get into these coverage battles, but at least there's potentially $2 million for a recovery there.
Which, given her medical bills, is, I mean, absolutely crucial. They're so high that
Right. Well, and just the injuries of having to, and there'll be permanency of injury, and there's so much hardware in that body that, that's a tough case. But at least in that case, there's $2 million in coverage.
Right.
So that was really, that is smart, to be able to adequately protect yourself. And insurance, it's not that expensive.
Right. And I mean, we're talking about these amounts of money, and I think they can seem huge to people, like, oh my gosh, $2 million, that's so much money. But when you think about the injuries that, we're talking about where you need that much coverage, these are life-changing injuries.
Right.
And, you're not going to be the same after an accident that causes an injury where you need $2 million in coverage. And I mean, how much is that worth?
One emergency room visit, you're automatically looking $300, $3,000, $5,000. Physical therapy can easily total up to $12,000. If you're looking at a week in the hospital, we're looking at over $100,000. I mean, so it can add up pretty quickly.
Yeah, absolutely. So we've talked a little bit about this and having to fight, but if you have this UIM coverage and it's your own insurance, will they just pay out automatically?
I wish. No, normally you are fighting your own insurance. So let's talk about Mike, a Loudoun County case that I had. Mike is hit in the rear end collision. He's at a standstill. And the driver that hits him has minimum limits of $25,000. Mike has $100,000 under UIM, under uninsured, underinsured coverage. Mike has 2 bulging discs. He works as a car mechanic, and of course, he's limited in his work afterwards. He has to be out of work for a period of time, looking at future surgery. And so basically the $25,000 liability policy, they said, we're paying out right away. Here, we're throwing in the towel. And it used to be that even though they put all their money on the table, they still had to defend the case. Now the law has now changed and made it much easier for the liability carrier to just say, here's the money, and now the burden's on the UIM carrier to
Fight about the
to
rest.
fight about the rest and to put their own attorneys out there and pay their own attorney costs to fight over it. But still, you still have to go ahead and fight. So we had to go ahead and take that case all the way to trial because Mike's own insurance would not pay anything above the $25,000 that the liability carrier had put in. And of course, at trial, it was interesting. We actually got 2 insurance adjusters that got removed from the jury, but an insurance sales agent got left on the jury. And the one thing she said is, when I sell insurance, it's so that my clients can be covered. And so the jury came back with a verdict of more than the $100,000. So we were able to get both the $25,000 the liability carrier had already put on the table, plus the additional $75,000 of Mike's coverage. But we had to go all the way to trial, and he had 2 bulging discs.
Yeah.
So, but again, there was money worth fighting for. And that's the key thing. You might have to fight for it, but at least it's there to go get,
Absolutely. So you talked about this a little bit. The law used to be much more difficult when you had a liability carrier that had less coverage and they were willing to pay out, and it's the UIM that's fighting you. How has the law gotten a little bit better to force the UIM carriers to pay out or at least defend the case themselves as opposed to kind of sitting back and...
Right. Well, I mean, as you know, the Virginia Trial Lawyers Association has done a lot to try to improve the statutes and everything.
Right.
Because, you buy your own insurance to protect you. So you're paying the premium. So if somebody that hits you that doesn't have adequate coverage or has no coverage, you're going to be protected. So I'm oversimplifying this because, as you know, it's a little bit more complicated.
Right.
But basically, the law has changed so that it shifts the defense. So once that liability carrier kicks in, like in Mike's case, it puts their $25,000 on the table. Now Mike can essentially release them, and now his own insurance company is completely on the hook for defending the case. So now they have to absorb the cost of their own attorneys. It used to be that they could ride on the backs of the liability carrier. So let's say Progressive was a liability carrier. The old law was Progressive would put up its $25,000, and let's say State Farm was the UIM carrier, and State Farm said, well, we don't want to pay out the other $75,000. Mr. Progressive, you have to go ahead and try the case. Well, that has now changed. So if Progressive puts its $25,000 on the table, it can basically say, look, we put our money on the table, we're out, we've done our part, and now State Farm has, if they want to fight it, well, then they're going to have to pay their own attorneys.
Yeah, have some skin in the game.
Have some skin in the game, exactly. That's oversimplifying, but that's basically what it's done, is it's now put the burden on the UIM carriers, so they can't just sit back and say, well, we don't want to pay our money.
Because there's no incentive for them to, in that case, if they're not having to pick up the cost of the defense, and, they can just say,
let's see what happens at trial. We don't have to pay for the cost of the defense.
It's not a gamble on our part.
Yeah.
Absolutely.
So it's definitely a much, much better law.
Yeah.
Now.
All right. So we are getting towards the end of our show, and I'm hoping that we have some time to talk about homeowners insurance, which is also important, and we haven't really touched on it yet.
Right.
But why is homeowners insurance so important to have?
Well, a lot of folks don't recognize that homeowner insurance covers a whole heck of a lot more than somebody just getting injured on your property. So let's say that you're having a party and it's icy, okay? And so you're inviting people onto your property and you fail to put down the salt melt, okay? And somebody falls and they break their arm, etc. Well, under homeowners coverage, you can have that same medical payments coverage available. So now there's medical payments coverage that's going to cover your good friend's broken arms bills because you failed to put down the salt melt. Okay. But that's pretty clear cut too. And they can make a bodily injury claim against your homeowners coverage. But it's pretty clear cut because it happened on your property. A lot of folks don't realize that homeowners coverage, though, goes beyond your own property. So, for example, we have a case right now where the kids were at school middle school, and one young man playing a prank on the girl, as kids are so prone to do, decides that she's about to sit down in her chair to pull the chair out from under her. She falls, she hits her head on the hard floor, and now she's got a traumatic brain injury. Okay. Well, you look at that case and you say, okay, well, you can't sue the school, right? They didn't do anything wrong.
Right.
But actually, we can go after the young man's homeowner's coverage for having caused that injury. Again, it's negligent. It was accidental. It was a dumb thing to do. But kids, as you know, will be pranksters. But now at least there's homeowners coverage. And we can also look to our young gal's homeowners coverage to see, is there any medical payments coverage that she's got under her family policy? And also, is there any medical payments coverage that he's got under his homeowner's coverage? So I could apply to that. As you know, we also have cases of like a negligent assault. We had the flag team gal, remember? And she gets hit during flag team. And of course, we claimed that the person that hit her was doing the routine inappropriately, et cetera. And that was, controversial, et cetera. But again, we can look to the homeowner's coverage to potentially cover that accident, which again happened on school property, but after school time. And you couldn't go after the school, you couldn't go after the flag team. I mean, so basically there we had to look to the homeowner's coverage again.
And I mean, it really does cover all manner of things that you wouldn't even think about. I still remember my husband, who's also an attorney, when, we moved in, and he already owned the house that we now co-own. And, so I moved in, put me on the, mortgage, put me on the homeowner's insurance. And he came home that day and said, all right, I took care of everything, defame at will. Because it's something that people don't really know, that your homeowner's insurance covers things like somebody sues you for defamation.
Yes.
You can look at your homeowner's insurance. We have that very weird tort in Virginia of tortious interference with parental rights.
Right.
That your homeowner's insurance will pick up pick up the defense of if somebody.
We also have the weird statute, the insulting word statute, which is kind of a parallel to defamation.
Right.
So there's these weird claims that can be made. You and I did the show on basically cyberbullying and cyber attacks. And again, that's an area where you can look to the homeowner's coverage of the person that has caused the injury.
Right.
In that regard.
Yeah.
So the same thing with condominium and renters insurance. It too has the ability of covering somebody beyond just the items, in the apartment that's being rented.
Right.
We had the Amtrak train case where our client was assaulted by the drunk on the Amtrak train. And we tried to go after Amtrak for that case. It was somewhat of a sexual assault because we had the pictures of the bruises on her breasts and her thighs and everything. And it was very clear the gentleman was drunk. He was arrested when the Amtrak train was stopped, and he was arrested and taken off the train. And our client was pretty brutally assaulted. Good thing she actually had a taser on her. Yeah. So anyway, we tried to go after Amtrak thinking that they had allowed him to buy too much beer from the booze car or the cafe car. And it turned out he had brought his own case of beer on the Amtrak train, unbeknownst to Amtrak.
Right.
So we couldn't sue Amtrak, but then he had condominium owners coverage for his condo in Florida. Now this happened in Richmond. So we were able to pursue a recovery under his condominium owner's coverage for that assault on the train. Now, if we had shown it was an intentional attack, then his insurance would not have covered. But fortunately, he claimed that the train was rounding a bend and he accidentally fell into Our Lady, and that all the bruises happened because he was scrambling to try to get up from on top of her, which is great.
Yeah, because his insurance kicked in.
Right, because his insurance kicked in, because now he's saying it was an accident, it was just pure negligence, it wasn't intentional, et cetera. And so we were able to get the condominium coverage to pay out as well. So, and again, the renter's coverage, the renter's insurance. And I've also seen tragic cases where folks will have a flood and lose all their belongings, or they'll have a case of mold, or, and so having renter's coverage is a good thing overall.
Right. And those are the things people think about. I think when, oh, I need homeowners insurance. Oh, I need renter's insurance. It's to protect from those like natural disaster, fire, just losing your property, I think is the reason most people get it without realizing that you're getting coverage for a whole lot more.
Yeah, you're protecting yourself if you do something kind of stupid, if you pull the chair out from the gal, as a prank in middle school, if you cause injury to somebody else, even if it's off of the property, if you're sued for defamation, as you mentioned, Katie, or the insulting word statute, or perhaps there's a Facebook feud and, you're sued for that. Well, and not only does it provide coverage, it provides your defense attorneys.
Right.
Okay. So a lot of times we'll get calls in the office where somebody will say, well, I need an attorney to defend me because I've been sued for defamation, or I've been sued because they're claiming I negligently assaulted them. And the first thing I do is say, did you check you have homeowners or renters or condo coverage? Did you check with your insurance? Because your insurance gives a duty to defend. So now you've got attorney coverage.
Yeah.
Which paying attorneys, as you and I know, at our hourly rates can get pretty daggone expensive.
Very, very expensive. Right?
Yeah. So another really excellent reason, same thing with your auto coverage. It provides the defense for you.
Absolutely.
Huge. Even if you're sued in an auto case where you're claiming you're not at fault, your auto insurance has to provide the attorneys to defend you. Which is really good.
Absolutely. And I know we haven't hit on it yet, but this is a really important thing that we're always recommending to all of our clients, and that is umbrella insurance coverage.
We kind of referred to it with Cece because she and her husband had done a good job of getting the UIM, $1 million in UIM coverage. But it's actually part of their umbrella coverage. But getting umbrella coverage is something you can do on top of the auto coverage. You have to be really careful when you get the umbrella coverage in terms of what you're getting, because most umbrella coverage is just liability. So, it protects you and your assets if you cause harm to somebody else. Or like we talked about Mr. P causing harm to somebody else. Mr. P should have, with all of his assets he should have had both the auto coverage at a high level and the umbrella coverage. But you can also get umbrella coverage that covers you for additional underinsured, uninsured coverage. And then again, you can get umbrella coverage on your homeowner's policy as well. It becomes a lot more applicable when folks are older and when they've accumulated more in assets.
And you want to be protected from people coming after your assets because they know you have them.
Right. Exactly. Two good books before we leave you today. Homeowners cover insurance and auto insurance put out by the State Corporation Commission are really good consumer guides. We'll try to get the links up on the Raising the Bar Law Talk radio show website. But if you go to the State Corporation Commission website, really good consumer guides on auto insurance and homeowners insurance. Highly recommend getting them, reading them. There's so much more in them that we didn't get to talk about today. And next week.
Where's the best news and talk? AM 820, WNTW Chester is the answer.